Meantime, CNBC's CEO Council Summit is underway right now out in beautiful Santa Barbara, California. That doesn't look too bad. Here's what Goldman Sachs CEO David Solomon had to say about inflation and what it means for the Fed.
There's no question that, peak inflation has come off. When I've talked publicly about this in the last couple of months, I sense that it's going to be stickier. It's come off its peak, but it's going to be stickier and more resilient, which is why, we're kind of managing and expecting that while the Fed may pause and it will be data dependent, you might need to see higher rates, to ultimately control it some more.
It's like you are in his head, Guy.
He watches the show religiously.
In terms of
inflation. Craziest thing. And I happen to agree with him, as I should, because we've been saying it here for a while. Yeah. Jamie Dimon has said that. He had 3 Fed speakers over the weekend are basically saying the only thing that's not listening right now seems to be the market, because interest rates are starting to listen as well. So it's right out there. The Fed has told you what they want to do. They've told you, listen, inflation is a problem. Rates are going to remain higher. We might be raising anymore, but we're not taking it off the table, and it'll be longer than people realize. The only thing that doesn't get it is the market. It's going to start to, I think, though.
I mean, we spent 20 minutes at the top of the show talking about 2 reasons why, outside of the United States, why there are inflationary pressures. And we haven't even talked about what's happening here, Rebecca.
Yeah, no, I totally agree. I think we're at a high for long, not a quick pivot to easing. And that is going to have flow through to mortgage rates, to housing, to interest sensitive sectors, commercial real estate, among other things. So I totally agree. I mean, inflation isn't even close to their year-end target, which is 3.5%, and they're trying to get to 2% before they even start easing, or a 2 handle.
Yeah, do you think it's
not
really
this year?
Do you think it's?
I think they would love to have a 2 handle.
2 handle,
right?
It's good enough.
2.99.
2.99.
But we're not going to get there this year without some major deflationary shock, which is possible. To your point with China, right? Iron ore is down 20% or so.
Right.
Oil
Copper
prices
are low. Right.
So maybe commodity prices help, but without wages, without layoffs picking up, I have a hard time seeing us getting there.
Yeah, I would just say you used the term stagflation before. It's something we've talked about for a long time. I think none of us had invested in a stagflationary environment, but I think one thing we all kind of know is that it's probably not great for valuations, right? And so that's the one thing, and I'm going back to what Guy just finished his little soliloquy or whatever that was. It's just the only thing that's not getting the message is the stock market, but it's not the whole market. It's 10 stocks in the stock market.
Right.